Hello and welcome to Distributed Systems and Blockchain in the News. My name is Thomas Bocek and the first article is about dead NFTs. It's this article here, and NFTs gained popularity during 2021 and 22 during the bull run, reaching a monthly trading volume of around 2.8 billion US dollars. That was in August 21. That was at its peak. And in July 2023, that's what the article is about, the weekly trade value went down to around 80 million US dollars. That indicates a significant bear market. NFTs are not traded that often anymore. And they analyzed almost 74,000 NFT collections, and they found that 95%, roughly 70,000 collections, have a market capitalization of 0 ethers, rendering them worthless. And even there's an oversupply problem. Almost 80% of all NFT collections remain unsold. That indicates there is a large supply and a low demand. While the recent downturn has been labeled by some as the death of NFTs, as you can see here, dead NFTs, and also other articles as from the register, which are saying that 95% of NFTs now totally worthless, referencing this study here. Besides having very interesting and nice statistics, this site has also a section called NFT with real use cases, where they see real use cases, for example, in preserving cultural heritage, gaming, token gate, access, fractional ownership, real estate, or digital identity. So for my students, this may be a source of inspiration for the challenge task assignment. And this topic is also discussed online, if NFTs are dead or not. Many agree. However, there will be always that one guy who says, now it's the time to buy. And this is also here in this article from Cointelegraph, where when we scroll down, we see there is for sure one guy on Twitter. He says, now it's the time to buy. Again, this is not an investment advice, and I never bought NFTs myself. And this is this guy here. That means time to buy, no investment advice. Okay, the next topic, it's about AWS. So we are leaving the crypto world. It's the following article here. And this is about IP version 4 scarcity. And AWS has around 100 million IP version 4 addresses. Now, since IP version 4 is scarce, there is even a market for IPv4 addresses, which you can see here. So one address roughly you can buy for 37 US dollars. Some are more expensive, some you get for 35 US dollars. And if you value the IP version 4 address at the price of 35 US dollars, then AWS has, with all their IPv4 addresses over 100 million, they own approximately IP version 4 addresses that is valued roughly 405 billion US dollars, which is a 2 billion increase from 3 years ago. This is this article here. And starting from February 1st, 2024, so next year, AWS will charge 0.5 cents per IP per hour for all public IP version 4 addresses, which roughly amounts to 43.80 per year for each IP version 4 address. And it is estimated that AWS could generate between 500 million and 1 billion US dollars in additional revenue from those new IP version 4 charges. And now the question will be, will this drive IP version 6 adoption? And there's also an opinion. Well, AWS, they argue yes, that this will change, that the user now will start to use more IP version 6 and will migrate from IP version 4. However, there are other opinions, like from this guy here, from this article, and this author, his opinion is that it won't drive IP version 6 adoption due to AWS lack of robust IP version 6 support. And he claims that more than 90% of AWS services, the endpoints, they don't support IP version 6. And he has also a nice dashboard for that. So here he shows that the services IP version 4 only, there are 92% of that, so most services don't work with IPv6. Furthermore, the author says that for large AWS customers, the IP version 4 charge is insignificant and will likely contribute less than 1% of their bill, making it unlikely that they will invest time and money to change from IP version 4 to IP version 6. So the next story is again a story from, or an article from the crypto world, and it's this story here about Nic Carter. And the story is about Satoshi Nakamoto, the pseudonym behind Bitcoin. Nobody knows who he is, except of course Nic Carter, and he is suggesting the NSA might be behind Bitcoin's creation. And he calls it the Bitcoin lab leak hypothesis. He thinks it was an internal R&D project and one chose to secretly release it. And the NSA released even a paper. It's this one here in 1996. It's about anonymous cache. And one of the authors was Tatsuaki Okamoto, which is quite close to the name Satoshi Nakamoto, I guess. So yeah, the mystery solved. We know who invented Bitcoin. So, and the last article, this is about ganache and truffle. It's this article here. And this is a library or framework that is used to test and help with Ethereum-based smart contracts. Truffle Suite launched in 2015 and had a user base of roughly 1.3 million smart contract developers worldwide. And now they are transitioning it from their ganache truffle to Hardhat, which is another library framework to test and check the correctness of smart contracts. I'm not sure, they mentioned about MetaMask snaps, so I'm not sure about the alternative MetaMask snaps. I never actually used it, so I have no experience with that. However, I used Hardhat for testing, so if you need automatic testing, then for sure use Hardhat. That's the industry standard these days. And if you want to implement such kind of a testing framework in the challenge task, don't use ganache truffle, go straight for Hardhat. So that's it for this week. See you next week.